Oh, we are live. I didn't realize this turned on already. I normally schedule these in a slightly different way. Apologies if you were staring at my face for a second. But we're going to go and quickly look at what's happening with the markets and what is going on. We're seeing a second day of pretty much exactly the same pattern as we have had before. I'm sorry I wasn't here for the market open, which is when some of the fun usually happens. But we're seeing a big rise when the when the shares first began trading. Again, a big jump today, not quite as big as yesterday. I think yesterday, like say Tesla opened up another $10 higher, Apple, etc. So, but then we're seeing this gradual sell off through the day. And yesterday, I do apologize in advance to anyone who was watching. Or was it the day before yesterday? I can't really remember, but they seem to be doing exactly the same pattern because I went and bought a bunch of Tesla, and then immediately after I went and bought that bunch of Tesla, it began going downhill, and we're down at 660s, 670s at the end of yesterday again. But now we are back. So let's see what's happening. I'm going to try to switch between a few different screens here so that we can see this. So as we are here, I've got a few different graphs here. I apologize, they're small. Tell me if they're too small, and then we'll just look at them one at a time. But I just began realizing that switching between them too frequently just meant that people maybe were interested in something that wasn't on the screen, but I was showing something else. But anyway, we'll try a few different things out. So what do we got? So Tesla jumped back up to almost $700, or I think like maybe a few of the trades broke it, but then it's been jumping around the 690 mark. It was down 684 just a second ago, and I want to buy one. I want to buy a share today, but I don't know. Do I need to time it? Do I just buy it at 690? It seems like a good price. Now we're down to, whoa. Literally, as I started, everything was going okay. Everything was flat. Everything was sort of normal. And then the moment I start talking about it, we begin sliding down. Look at this. Look at these candlesticks. Maybe I should just turn this off. Maybe I should just go and, I don't know, make myself a sandwich, do something that doesn't cause the market to crash. Literally, I think the last time I went and bought a load of stocks, all the ones that I began buying just went and lost like 5 to 10%. Each after I bought them. So I apologize to anyone holding those stocks. I just have this very amazing impact on these things. Still down like 4% on Tesla. Hey, just look at my eToro portfolio. I say this every time to people. Just look at my eToro portfolio. I bought Tesla at 875 in the video when I still have that share. I think it was quite hard to actually be able to buy Tesla at that price. It like jumped up once the moment I was recording the video, and I just was completely just, yeah, whatever. I want to show people how to buy a Tesla share because that's what everyone wants to do. So there we go. Do I invest in smaller companies that are higher risk potential for greater growth? Yes, but to a degree. Fish Palace, nice name, is asking. Yes, but to a degree, I don't really play penny stocks much. I don't really play in those fields. I play smaller, and I play companies with big potential. But I want the company to show some evidence to me on which I can base like a real robust growth valuation. And that means existing products. That means like I'm probably not going to be playing SPACs. I'm not going to be playing companies that keep saying that they are 3 years out from maybe launching their first service or product or things like that. Just because I don't believe many of those companies in many of those circumstances. Or I certainly, having been in like various different kinds of businesses before, I know that quite often the thing that you end up with in 3 years will look nothing like what you talk about right now. So any projections are just like sticking your finger in the air and guessing. So I don't really play on that one too much. Do I think 21 is too young to invest? Rona was saying. No, it really depends. It really depends on a number of factors. Everyone has to make their own decisions, but the thing is, during the different life stages, you have different priorities. And when you're first starting out in the world of work, that's probably the tightest you're ever going to be for cash flow. That's probably, like you're probably earning the least. I know there's ups and downs over time. You're probably earning the least out of your career. You have, you're starting to pay proper rent, maybe more than maybe you were during university and stuff, or if you didn't go to university, if you lived at home at some point, you're beginning to have all these costs that you never did before. And there's other things considered, like you might be buying first cars, first houses in the next few years, all of those kind of things. And so it's difficult because with investing in the stock market, like, yeah, maybe in between those things, but the money can go and crash. So if you're not planning to hold that money for a long time, I don't know. It's just a difficult question because different people have different risk tolerances as well. Like some people will be like, yeah, I don't mind it jumping up and down. I personally don't really care, but there we go. There's no age that is too early other than legal requirements. You know what I mean? But do I think stimulus will affect the market at all? This is an interesting question. People keep talking about it, especially all the US YouTube, because in the US this is such a big deal. You know, everyone's getting a check through the post, like $1,400. Great, and I think this is this presumption, and to me, I slightly disagree with some of the perceptions, some of the way that people think about it. There's the presumption that people are okay, everyone's doing perfectly fine, everyone's all right, and you know, people are just going to get this money and they're just going to go and invest it. You know, that it's like extra cash, that it's surplus, they don't need it. And I think this stems to a degree from the fact that a lot of the people who talk about this, commentators on CNBC, you know, like some of the big YouTubers who rake in a huge amount of money. And I like some of these guys a lot. Like, don't get me wrong, I'm not at all trying to cast negative light on this at all. But it's one of those where I'm looking at going, you don't really understand how with the events of the last year, the stuff has been happening to people is just so hard. It's just so tough. There's so many people losing their jobs who are like losing real wages due to inflation, but no pay rises, who are having to do jobs. Like, I personally know people like I know people who were pilots. I know people who were in all kinds of jobs who are literally taking like delivery driver roles or other kind of things just because like that's the world that we currently live in. It's crazy. It is really crazy. And people are forgetting this, that the world is so much bigger than like the world of the YouTuber or the world of the guy whose job hasn't really changed other than maybe sitting at their home desk instead of having to travel to the office and kind of doing roughly the same things. For a lot of people, the world has changed massively and it's tough. And so I think like, yeah, sure, there's going to be maybe a bit of an influx of money, but people, I think, are overestimating. I seriously do not see the average Joe sitting somewhere in the US like saying, "What shall I do with this 1,400? Oh, I'm going to take it all and put it on red, put it on Tesla." You know, like I just don't see that happening. But anyway, while I'm talking, my potential buy of Tesla is continuing its climb down. What do you guys think? Are we just going to have another day like yesterday where it starts high and then just goes all the way down and we end up being able to buy it below 670? Is this what's going to happen again? Is this a situation? Apple started kind of strong. Interesting. Got people joining. Do tell me if you guys see that there's some kind of issue with lag or something like that. If you're finding that, because YouTube keeps telling me that things are bad, but I don't think they're as bad as YouTube keeps telling me. So let's look at it if anyone has any questions. How do you think the stimulus will affect? Yeah, we just talked about that. Lifetime ISA at 21. I think it depends on your financial position and the kind of job you have and your ambitions on buying a house. I think like if somebody has a plan to buy a house and it falls within the boundary of Lisa rules, so you know, like it's under 450k, you're buying at least 12 months from now, but hopefully not too long in advance because the returns on most of these products are not great, not ideal. Some of them allow you to invest in like some funds that mimic S&P 500 or whatever, but the fees on those are just so horrendous. Like there's an annual 0.5% fee, and then there's £12 per trade. So every time you invest, you're losing £12 off the bat. So if you are going to be buying relatively soon, I think that's great because that 25% that you get from the government is a massive uplift towards the deposit. But it really depends on where you are financially and whether you're happy to be locking the money away. Because with leases, the penalty is coming back, remember, in a few weeks when the new financial year hits. At the moment, the penalty is just 20%, which means that if you put your money in, you get the extra 25% from the government. If you then choose to take it in any way that isn't through retirement or through buying a house, you pay 20%, which actually basically is just the government portion that gets taken off. But from the 6th of April, that's increasing to 25%. And that means that if you have a Lisa account, you're essentially being penalized. You're essentially paying the government bit back, but then a 5% on top of the total, which is actually a greater proportion of the amount of money that you've put in, if that makes any sense. So it's just an important consideration. Paul saying, yes, there is a lag. Not too bad, though. Thank you very much. What are you drinking? We're on tea. So it's a big cup, orange. It means I'm drinking tea. The tiny little thing, which some people get confused by, saying, is there a weird effect going on? That's my tiny espresso cup. And seeing as it's the afternoon, we've already passed the espresso stage. We're wired from the 7 espressos that we already had, double, of course. So we're sort of down to just tea level now. Um, what's my Tesla weighting in your portfolio? You've gone very heavy on it recently. Yeah, it's completely disproportionate, and do not do what I do. In this sense, it would be my advice, unless you specifically want to do it yourself. I've gone way heavy just because the sale has affected Tesla way beyond even some of the other companies. So I know like AMD is cheap; it's still under 80. I've been buying it all week, but Tesla's collapsed so hard, and in my opinion, my personal opinion, without any merit or any reason, just because it is the biggest company in like tech out there, really, that is growing. It is the one that lots of funds are way over invested in. So there's a lot of funds out there that have Tesla at 10-12%. I think I saw like one of the really big ETFs out there that does tech, US tech, has a 20 or 25% or something mental. So there's a huge there's a huge amount of exposure to it, and I think that probably prompted the sell-off. Because remember, stocks that have been very fast accelerating in the distributions of funds, especially really big funds and ETFs, they suffer from the sort of like multiplier effect. So for example, like when there's a sell-off, you then get an issue that the market cap of the company reduces, and then all the ETFs and all the funds where tens and hundreds of billions of dollars sit, they have to sell the stock to rebalance their portfolio, and that kind of pushes it further. And then the retail investors and other like individual investors and smaller funds, they look at it and go, oh, the price is falling, and you get into the cycle. The same thing happens on the up. So the same thing happens with stocks like Tesla. So once they get going, that actually helps them go, because like the price goes up, they form a bigger proportion of of the fund that then they currently have invested, and so they're like, okay, well, we need to up it to match that level, and so it begins doing the same thing. So these types of stocks, they get this weird multiplicative effect in a way. So anyway, is YouTube my only job? No. I have a few other jobs. I have a different channel that I talk about my work stuff. I'm currently basically in a switching process between my real main job, which is my consulting business, and YouTube. And my plan is through this year to make the switch complete, and so hopefully not do any more consulting and do YouTube 100% and nothing else. Who has that? John Smith. So I think it's good. I think we might be getting there. I think we might be getting it. I'm really enjoying doing this, but I do have. I also do blogging and stuff, which is sort of part of the same thing, part of my online content business strategy, but completely separate to all of this. So yeah, I'm still waiting for Tesla. It looks like we might be seeing exactly the same pattern. So although I normally don't ever time these things, and I kind of mean by timing, like sort of, really sitting, trying to figure it out. I'm just curious as to whether it will drop anymore. I don't mind buying at 690 if it climbs back up there at some point, or even 700. I don't mind that, but if it drops to 660 something, we're definitely buying. So we're just going to keep an eye on this one over here and see what happens. What's my average price for Tesla? It's reasonably high because I bought so much recently that I think my average is quite high. 607 is the answer. My average price 607 for Tesla. I think so I bought quite a lot recently. I bought like at 800 and I bought in the live video recently. I bought a share at like, I think it was, so I bought a lot of it at 613 recently, and I bought some at 670, and then I think yesterday I bought 713. So I have a big distribution. There we go. 110% GME. Yeah, so this is the topic where I've been looking at it and following it, and I'm like, do I talk about it again? Because I'd made some videos about it because it was so topical. Everyone wanted to discuss it, but the problem is, so did everybody else. And I got in there relatively early, but so did everybody else. And obviously, like, the big YouTubers just went and collected ridiculous numbers of views on it, and people like me just like got absolutely nowhere. I've actually had to remove those videos since then because it's such a topical thing, and it was really hot when it was happening. Everyone wanted to watch it back then, but now, like, that it's gone, all the metrics dive, and it's really bad for your channel if you have videos that have like 0.2% click-through rate, and then when they click, they only watch a few seconds out of a long video. So you have to remove those because of those issues. So I'm not sure I want to really even talk about it. It's just one of those things where if you take a big step back, the whole GME thing, and I'm not saying anything negative about any people or Wall Street bets or whatever. But in the grand scheme of the world of long-term investing, which is the kind of thing that I'm interested in, it's like a game that a few guys are playing, and it's kind of fun. It's fun to watch from the side, but I'm not really into playing those games. I don't do day trading, swing trading. I don't try to like squeeze people or partake in the squeeze, even though like it just doesn't really interest me because I see these things and they can go either way, and you can go up and you can do really well. You can go down. Like some people probably can make a lot of money. It's just not something that I personally do. I don't have the like I don't even want to have the luxury of being at my computer 24/7, like watching what the hell's going on. Like I have days when I'm not here. Like this morning I wasn't working, I wasn't here. And if things are swinging, if like market open, I wasn't here. Like I don't want to be in that position where I have to have my finger on the pulse. Number one, number two, I just don't have any interest in it. If I'm honest with you, like I've got better things to do, in my personal opinion. Everyone's different. There's a lot of people who love the thrill of this stuff, but the situation is the majority of these people will also lose money, the vast majority, and that's just not my opinion. That's like based on any study that you do. So yeah, I'm not. It doesn't really interest me. What have people been asking? U.S. national debt clock says debt is going up very fast, says Hambo04. What do you feel the effect will be on the stock market in years to come? It always looks really bad when you look at it right now, and the UK is the same, right? Everyone's been spending money. Sure, there's going to be like long-term implications, but people forget that the ability by the government in the long term to manage these things is far greater than like you as a household being in a similar situation. So I just don't see that as a like people keep saying we're in the brink. Like you would watch a video from 10 years ago, people say we're in the brink, like this number is so high, it's unmanageable. And yet people manage and people continue like I don't see an economy which, is the size of the US collapsing because of it. I might be completely wrong. I just think we're not at that precipice kind of position just yet. Um Following my Tesla comments, Ian is asking, do you think of the possibility of ESG indices dropping Tesla because of Bitcoin energy implications? Um, no, I don't. This is one of those things where people will always so with Bitcoin energy, I'm kind of like on the fence, and I'm not on the fence because I don't care, but there's a few different considerations. One is people often point out, oh well, it consumes so much energy, it's more than like X, but it still consumes a fraction, even the ridiculous mining situation we find ourselves in, which actually over time, even with the price going up as the halvings happen and stuff like that, will probably solve itself anyway. But that's beside the point. Um, people talk how much energy it consumes, but they like you look at the international banking and payment processing industries, which are sort of like combined in Bitcoin, and look at how much they consume. They consume like an order of magnitude more than that. It's kind of like one thing. This is a big overall industry, so people kind of need to be mindful of that. It consumes it in a different way, which seems odd, the whole mining process, but in the same sense, like every single like bank, it has massive systems, servers, etc. And because there's repetition of all of those systems and servers, there's like that many different machines that exist that sort of just sit there not doing anything, consuming energy. So it's easy to kind of compare it to things that people understand better, like the consumption of a small country or something. But when you begin thinking about it more logically, it's kind of one thing. But the second thing is, like, as everything early on, these things might not be at their optimal state, and it may be through forks, it may be through building layers on top where like they do some processing in some shape which then gets sent into the individual blocks, and that processing is not the energy consuming kind of way that the actual blocks themselves. I don't know which way it's going to go. It's like you look at the very first cars, like in the first 5 years of their existence or 10 years of their existence, like they would hardly go anywhere. It was like hugely impractical. You'd get rained on and stuff like that. It didn't mean that the concept of the car was bad. It's like, well, yeah, it's the first kind of practical implementation. I think there's a lot of good things in the theory and the maths behind Bitcoin. I just think like that just because there are some things you can point to that aren't ideal, they can be improved over time, like with everything. So I'm not particularly concerned about those things. I'm going to share how you value stocks. Jordan's asking. I did promise And I'm going to be doing this. Problem is, I've had a few things this week that have like knocked me out a little bit. I'm not going to go into the details, but so I was thinking, do I record a video today or do I jump on the live? Because the time I have, I didn't really have time to do both properly. I will do a bit of scripting and stuff after this, but there's also a timing thing. So I said that I might release the Tesla valuation video tomorrow, but I'm nowhere near ready because I didn't do work on it this week. And so I will release it. I'm not sure when, because there's some time sensitive things. So I need to talk about ISAs. I need to talk about stocks and shares ISAs because we're only 2 weeks away from not 3 weeks away from the financial year end, and there's other important things that are really time sensitive for people. And I think a lot of people want to know answers to those questions, so I'd prefer to give them now. The Tesla valuation is important, but it's not this important. I think just to regular people who want to understand a few things and help with just picking things based on price, that maybe like they don't have the time to go and do the research that I do because I have nothing else to do with my life. So I'm going to talk about those things. Because it's been delayed, it might go even beyond next week, just because next week I have a bunch of stuff that is not related to my YouTube business or even my blogging business that I have to deal with to do with my other business, my consulting business, that is stuff that is not even work. It's just like headache. I just need to solve a few different problems that are going to take probably like more than half of my week completely 100%. So I might not even be able to post videos on some of the days, like Monday, Tuesday in particular. Maybe I'll film one on Friday, but then wait to release it or something like that. So I will be talking in a lot of depth about my evaluation process, but it's just because of the timing and there's been so many important things to talk about that are time sensitive. I'm kind of pushing that out just for that reason, just to be completely frank and honest and transparent about it. My valuation for Tesla is much higher than this number. That's why I'm gonna leave it at this point. I'm not a financial advisor. I can't provide financial advice to you. This is just the opinion of a random guy on the internet. So do your own homework, blah blah, whatever. Oliver is asking, I apologize by the way in advance if I miss people's comments, if I forget to answer something. I've only started doing these lives like very recently in the last few days. I have no idea what it is that I'm doing. I am learning the software and the hardware and everything else as I go. I am adding to each of the, like, if you'll notice, like I'm beginning to do, I'm adding to my software and hardware and I'm trying to test different ways of doing it. Tell me if this is better than just looking at one individual one. I have no idea. Tell me if you prefer looking at a few different graphs at the same time rather than switching between them and leaving it on the company that you don't care about. But sorry, Oliver was asking, what was he asking? Thank you for the compliment. What do I think about online real estate companies? I'm looking at Zillow, Redfin, Open Door. Do I think they're better than others? So this is the thing. When I see a company, I look at their products and service, and this is where I have a very different way of looking at it. And it's probably based on maybe my career to date, which is super heavy on product design. So I've like worked in financial services for the vast majority of it, designing the actual products like credit cards, loans, current accounts, retail banking products, a little bit on the trading side, but very limited based on, I'm not going to go into the details, boring. Anyway, so I look at the products and services and, I've done lots of mergers and acquisitions kind of deals, selling companies and businesses, buying portfolios and trying to understand them. And my view on all these is very much on really understanding the specifics of the product, positioning within the market, some of the unique strengths and weaknesses, things that they have over the competition. And my problem with all of these sort of Zillow, etc., is are you already seeing this in the UK, for example? Like the different websites are beginning to kind of like do the same thing, and you then have this new layer of companies underneath them, like Purple Bricks, etc., that are democratizing access to buying, selling for people who don't want to spend the higher fees and are happy to do this stuff themselves. But they then automatically plug into all of these different ones. Tomorrow, a new one opens up; they're going to be plugging into them too. So I'm concerned about the sort of like uniqueness of the proposition and like what is it that they can do that is really going to take them to the next level. Because I'm not interested in sort of seeing something that's going to grow by 5%. I'm interested, like, can I invest in a company that has a real chance of growing by like 100% in the next year or 2 years? Then I'm kind of really interested. But if I think something's undervalued by 5 or 10%, I have so what? Like, if in the best scenario that's where it's going to go, it doesn't really tickle me. So I'm not particularly interested in those kind of things. What do we got? I'll go blockchain dipping. I don't really look at that stuff. I know there's some people who get really interested and obsessed with it, but But there we go. Dr. Gregorian, PhD, saying, have you watching your videos since last night and learning and teaching my mother as well? Thank you very much. I appreciate it. Your mic cuts on and off. Yeah, thank you for pointing that out. There we go. So I have to go and adjust. What's this all about? Good question. We talk about stocks, have a little banter. We talk about some strategy, some interesting things, and we talk about sometimes UK-based products and some other things as well. We yesterday, actually, I don't know if some of you didn't see the thing I did yesterday. It's quite interesting. I'm going to mention it. So I promised people that I'm going to do a full review of eToro, which I will. But eToro have been saying that they I've been trying to get an answer from eToro on a really simple question in my perspective, which is, do they withhold just 15% or 30% of US dividends when you get paid them? Because that's kind of material to some people who are investing in non-growth companies or even growth companies that do happen to pay dividends. And there isn't a good answer to this because I'm seeing anecdotal answers that say that they do not. So you have to pay the full 30% if you're based outside the outside the US, even if they have a tax treaty like with the UK. And some other people say, no, like you do fill in the WABN form, which you do when you first sign up. And it works, but some people say you fill it in, but they don't fill in the last page, and therefore it doesn't work. So I don't know one way or another, because from trying to research it, I got more confused than I got answers. So I have seeded a test yesterday, and let me try to jump between a few different screens here. Just open something up. So I got confused, and so I decided that I'm going to go and do a test here, and I went and bought this company called ADP. I'm not doing well. I sold Bitcoin to buy it as well. So I bought this company called ADP. I have no idea about this company. I don't have any interest in it. But so Automatic Data Processing Inc. So 1 second, let me again. So they have an interesting thing, which is they have a dividend due. Let me just open the screen that says when it's due. So they have a dividend due. Go away, Nasdaq. And I had to own the share today in order for me able to qualify for that dividend. It's 93 US cents. And so I just bought it and I bought exactly one share of it. And it's the underlying asset, like not any CFD or anything. And so they're going to be paying the dividends on the 1st of April. So I'm hoping that at some point after that, hopefully within a week, maybe within 2 weeks, so hopefully mid-April, we're going to get a dividend paid. And we're going to know for sure how much it is that we got discounted, whether it's 15 or 30%. So hopefully that will help people understand whether it works or not. I'm at the same time trying to actually work with them to resubmit a working one, but I have no idea if that's going to work or not. So we'll see about that. Mr. Frosty, do you review movies at all? No, this is a money channel. I have no idea what that's a really random question. I watch movies, but I don't review them. Do I think investor presentation is the best thing to look at when considering a stock? They certainly help, and I what like on the stocks that I'm bigger in, I go and study the stuff that they publish, but I don't go off their projections. I use the information to build my own view. At least I try. I think there's a lot of really useful stuff. In fact, I think some of the information within the packs about what they're working on and when they're planning to do certain things is more valuable than the performance from the last quarter to me, because that can form a clear opinion for me for how I would adjust my valuation based on those updates. So yeah, it kind of like I guess everyone looks out for different things in those. Hello, Jack. Afternoon, Sasha. Hello. Sasha gives financial advice on exactly where to put your money so you can buy a private jet within 6 weeks. Yeah, not quite that good. But yeah, it's basically like the long and short is I'm basically trying to change what I do. So I've been advising companies. I've been working with businesses on trying to help them improve, their products, make more money, all that kind of good stuff. And I've done really well out of it, but I don't enjoy the consulting side of the world. And so I'm trying to change what I'm doing by basically kind of talking about products, the world of finance, the world of personal finance, of improving people's money situations, doing my best to kind of help them understand things or maybe learn things better from maybe some of the experience that I've built up in the industry, that hopefully maybe will give me a slight edge over some other YouTube channels who maybe haven't had that experience, or maybe just a slightly different perspective, perhaps. I don't know. Yeah, just I'm enjoying this a lot more. I can tell you that much. I can tell you that much right now. So, buy Sasha's course. Oh yeah, which course is that? Is that my become a millionaire and a billionaire in 3 easy steps for $9,997 special discount today? I need to launch that course. That would be so hilarious. What's the benefit of having an eToro account and a trading 212? I get asked this question quite a lot, actually. So people ask, even this morning, like somebody asked me who was a YouTuber, like why would you have multiple? Like it doesn't make that much sense, really. Like would you have them if you weren't being sponsored by them, for example? Like eToro sponsored 3 of my videos some time ago, but they also have a referral. So all of I have free trading 212 in eToro, and all happen to have an affiliate program as well. And I use all of them. Well, actually, not trading 212 at the moment because they haven't been acquiring new customers for a month and a half now. But anyway, and my answer is yes, because I actually used all of those platforms before I began talking about them. And I actually enjoy all 3 platforms because they have unique strengths and weaknesses. I have a video where I talk about this in the middle of the video. You should go find it and watch it. Actually, early on, I think, in the video. I think it's like 7 investing tricks in 2021 or something like that. It came out this year, so go and find that. That talks in more depth about it. But in short, so if I talk, for example, about trading 212, they're great on price. They're great on some of the features, like all of this stuff that the other platforms simply don't have, and I really like some of those benefits that I get from them because I can't get them elsewhere. They're the cheapest in lots of cases, depending on how you invest and things. Even with the fee, they're still the cheapest in the UK. They sort of make it very easy for me to invest in lots of stuff. The ISA product is the cheapest, really, in lots of ways, even with the fee. So I'm going to be covering the details of that tomorrow. But eToro, for example, have some other unique advantages. Like they allow you to go and I know that might not be the optimal, and there's lots of people talking about other crypto accounts and stuff like that. But to me, who doesn't necessarily want to spend a huge amount of my time, effort separately managing my crypto in a different place, and I appreciate that, like they don't allow you maybe to transfer it out directly, or they say they do, but you can't, blah, blah. I have heard all this, but I can go and hold a little bit of money in crypto if I choose to on that platform relatively easily, which I enjoy. And I have $2,000 worth. Like, so I'm not just saying like it's a small proportion, maybe 10% ish of my funds out there at the moment, but yeah, I enjoy that. I enjoy the fact that they're the cheapest platform for investing in UK stocks repeatedly, although I haven't been doing that recently because almost all of my investments are in the US companies at the moment. But I know that if I want to have a small proportion, like say 5% of my money invested in UK stocks as well, like growth stocks, aggressive growth stocks, and I want to reinvest that money, they're actually the cheapest platform that I can do that because they cover your stamp duty fee. So I mentioned that in the recent video as well. So there's a few other advantages as well. Some this disadvantage as well. Like I don't like the trading nature of the platform. I mean, look at this. This is a mess. Like all of this, like green and red flashing and blah blah, and like numbers everywhere and graphs everywhere, and it's kind of makes it feel very tradery. They're kind of like trying to look like, oh, you need look a message of my gain yesterday was plus 2.5%. It's very like sort of trying to get you like clicking buttons and cost paying fees for leverage things. Oh, I need to borrow some money so that I can invest more, etc. I don't like that aspect of this at all. Although it's kind of weird because then on the other hand, they have the whole social thing and they talk about, following investors and stuff like that. So I kind of feel like they need to pick which direction. Are they like trying to appeal to traders? Are they trying to appeal to long-term investors? Because I don't like any of this like stuff over here. But anyway, maybe some people do. Maybe like I'm too old or something and I don't like it. But this to me just looks more like serious. And on eToro, like, sure, I can go and let's look at Tesla. I can go and look at the actual graphs. And yeah, I mean, like, so I can see this and I can see a chart over here, but we're talking like, relatively limited stuff that they offer. I can look at candlesticks, sure. But it's just, it's just not quite like. Do you know what I mean? Like, yeah, I'm not sure they know themselves. Like, are they sort of trying to make trading social, which they are at the forefront of, but they don't push it very hard because if you just go onto the platform, that is sort of buried. You have to look for that stuff. So I'm not convinced they know exactly what their proposition is at this stage. Um, Hello, mate. How are you doing today? I'm doing very good, thank you. Tiger Pew plays saying, Sasha, do you use Vanguard ISAs at all? No. So my ISA at the moment is with Trading 212. That's the screen that you can see right now. That's my ISA account. I don't use them. It's one of those, so when I'm going to be talking about ISAs, stocks and shares ISAs specifically, Vanguard is going to be featuring in there, and it is good in a way. It is good because you can invest in things, especially for the passive investor. It is sort of good, but my issue is that if I was using Vanguard for my ISA, I'd probably be invested in the Vusa Vuag, one of those two, depending on how I felt. There's slight micro differences that aren't really material, and they're not directly the opposite of each other. So Vusa is the one where you invest in the S&P 500 and then they pay you out any dividends that come out, and then you decide what to do with them, and you can buy in after that manually, and then essentially buy more of the same thing. So if you had, say, 50 units, you may have 50.1 units after that, right? Whereas with VUAG, it's a reinvesting automatically thing. So the dividends come in and they reinvest, but they reinvest in the price, not in the number of units. So you hold the same number of units, but the price of those units goes up. So it's like there's slightly different mechanisms, but the net effect is pretty much identical, really. There's market forces that kind of would work slightly differently with them, but my problem is that those are the ones that I would invest in, and I can invest in those types of things cheaper on a platform like, for example, Trading 212 or like Free Trade. I can invest for free into those, other than the fund fee itself, which is 0.07%. Whereas on Vanguard, I have to pay the 0.2% annual fee on top of the individual fund fee. So it's weird because I can buy probably, in my opinion, the most interesting Vanguard product cheaper off Vanguard. So for that reason, I don't currently have it, but it's still good. It's still better than a lot of other options out there, I think, especially for some people. What do I think of Hargreaves Lansdown? Well, Hargreaves Lansdown and some of the other big platforms, they're like sort of a polar thing. Like for small-time investors, for schmucks like me who don't have a huge amount of money, it's just eye-wateringly expensive. You're talking like £12 per trade. You're talking like all these other fees, and with some of the platforms, you have connectivity fees. If you don't know what that is, you don't want to know. It's like you pay per exchange, and then some of them charge you like because they get charged. This is the old school way of investing. So the brokerages have to pay lots and lots of really tiny fees. So when you buy stocks and shares, say on NASDAQ or somewhere else, they charge the brokerage there's like a very small transaction fee. It's like fractions of a cent per share type thing. But they then just pass that on directly, because that's how it used to work in the olden days. Like they wouldn't take on any of the costs themselves. They pass all of them to the customer. And some of these old school guys, they still do a lot of this. And it's like, it's not that it's expensive. It's just so frustrating because you look at the term sheet and it's just like 5 pages of fees. And you're trying to figure out what does it actually mean. It's just like so complicated. The big ones are expensive, and it's kind of weird because you flip. So if you say you have hundreds of thousands of pounds under management, they actually become cheap. They become cheaper than the ones that charge you like percentage-based fees, right? Because £12 is £12, and you go and trade like $200,000 of stock of Tesla stock. If they don't have a forex charge, then you're winning. Although the problem is they now introduce some of these additional charges. They do have forex fees, and they're often 1 to 1.5%. So I don't know where exactly Hargreaves Lansdown is in there, but I think if you look, it's probably going to be 1 to 1.5% or so. And it's just like you're losing £12 and then the 1% and then the annual management fee on top. And you're like, wow, this is crazy. Because even if your average is growing like 9% a year and you're 0.5% down because of the fund fee, and then all these trade fees on top, and that's going to eat a lot into that revenue. So that's just my view. Shall we look at what's happening with the stocks? Because that's kind of why we're here. That's why we're really talking. So Tesla is down to 683. So we were down just slightly lower, and if we're going to look, it's doing this slowly, stepwise moving down. Maybe we're going to be moving down a little bit more again, because that's what we've been doing a few times already, and that's what it was doing yesterday as well. This is the thing; it was doing the same thing yesterday. It sort of opened high, was it yesterday, day before yesterday? I've lost track of time now. It's just all the same. Yeah, so we've seen this gradual. It was like, at 7:15, 7:20, and then we've just been walk. We have this pattern where it opens high, then just walks down slowly. Like overnight, all the readjustments are made. All the funds realize they need to maybe buy because it's now higher than it was when it was really low. Some of them buy in, and then it jumps, and then the sort of intraday trading brings it back down again. So it's just a funny situation. Like this is not a stock that is one of the biggest companies in the US, in the world, by market cap, that jumps up and down by 5-10% per day. This is like Bitcoin territory. People 2 years ago would say, Bitcoin is a really bad investment because it jumps up and down like crazy and it does all these things. By the way, I just realized that my lights are not even on properly. Is it better? Is it brighter? Somebody should have said, "Can't see you, Sasha. What are you doing?" 30% is probably too much. Let's leave it at that. But now we have big companies. We have literally like Tesla doing exactly the same thing, and but yet this is different. People don't have the same negative opinion as people. Like, there's reasons. There's macroeconomy reasons, and there's tech sell-off reasons. It's kind of funny because the situation is similar in a way in the numbers, but I do get the differences. Don't get me wrong. I'm not saying they're the same, but there we go. Does Trading 212 show you? Ian is asking how much of your ISO allowance is left for the year. Yes, they do. I'm an idiot, so I have this thing here. So it says that I've used 89%. If you click it, it tells you. So the reason this number is not. If you look at my other numbers that don't add up, is I accidentally withdrew some money from it, which I did because I'm an idiot, and it's a non-flexible ISA. But yeah, so it's pretty good. It's pretty descriptive. It tells you exactly how much. And the reason mine is so weird, so you'll notice like I have like pennies in here, is because I got some free shares at some point when they did it. So when people would click my affiliate links, my free shares got deposited into this account. And as a result, like it counted towards my ISA, if that makes any sense. So there we go. But I didn't get very much of that because my channel was only just growing at that stage. So I think like out of this money, I don't even know how much it is. Like maybe 3,000, maybe not even that. I don't know. Anyway, red T-shirt. Yeah, I know. We're sort of trying to. I'm not sure about because on the live, my camera setup is entirely different because of compression. I have to use it, and because I can't edit, I normally film and log. So the setup looks completely different. All the colors look different. So yesterday or the day before, I'm losing track of. Yeah, yesterday I did a live, and I was wearing a top, and people were saying, "Oh man, like you're wearing a great top." And then I did a video later, and then like, "Oh wait, it's blue." It's like everything looks completely different. This cup looks really different. It looks sort of like a pale kind of orange color in my normal videos. I do my color signs a bit different. I do them more like cinematic, more mellow, less sort of in your face. But it's very bright in the lives. I think you kind of need to because otherwise it just looks funny. What do we got? People talking about trading 212. People saying, I think I'm going to do a very quick summary from reading things for about 3 seconds. People have trust issues with trading 212. I'm not surprised. So this is the thing. I'm showing you trading 212, right? So this is the people think that I have some kind of hate for them because I released like 2 videos where I criticized very specific things, even though I probably released 15 videos where I said really good things about them, but people don't pay attention to them. I mean, I do like the platform. They've built a really great thing for tiny investors like me who have a few hundred to put in at any one time. And I'm really appreciative for it. But that's not to say that, like everything is rosy. I say things as they are. So when I see things that are good, I'm going to highlight things that are good. And when I see things that are bad, I'm going to highlight them the same. And some people, like, it's really funny, the life of YouTube, because my whole reason for doing this is I think that I can probably provide a little bit of value to people watching, maybe to try to explain things from perspective of, I don't know, I've been in this industry for a little bit, not necessarily in trading, but in personal finance and lots of other things. I've done a few years in this stuff, but anyway, and people say, "Oh, well, you're only recommending eToro because they pay you a commission or because they sponsor 3 of your videos." I'm like, until January, my biggest source of revenue was trading 212, and look what happened with that. The moment that a company does something I don't like, I'm just gonna say it. Especially if I have like actual concrete things to go on rather than hearsay or somebody says that something happened with their account, but I don't have any proof of that. Because very often people say, "Oh, they sold all my positions without," and I'm like, "Awesome! Could you just send me some screenshots just so that I can begin understanding what's happened?" And it never goes beyond that. And so like it's difficult because people always think you have an ulterior motive. People always think you're trying to like do a fast one or whatever. No matter how hard you try, no matter like how many times you try to show the opposite, it happens to every person who isn't like trying to talk to lots of people. So it's just part of life. It's just one of those. There we go. Shit, like thank you very much, Mr. Frosty. I appreciate it. If a few more people fancy hitting the like button for the YouTube algorithm, that might do something. It probably won't do anything at all, but just in case. Just I'm going to kick your ass. I'm happy. The more people kick ass in investing, the better. It means they're all going to be doing better. What are people saying in all these comments that I've been completely ignoring? I apologize. I'm literally just trying to scroll up to see what people have been saying in the comments, and there's like a lot that I've completely ignored. Try saying more pros. I'm not. Yeah, it took me 5 minutes to figure out how to sell stock. I don't think that means it's a pro platform, because you need to know what weird things you need to click in order to be able to sell. To me, that doesn't really make it particularly pro. I think and flashing things. I'm not sure that like I certainly when I worked in an environment where I actually had trading screens, like I had 9 screens in front of my face and stuff. I didn't have that in front of my face. So maybe some pros do it and like it, but I don't think it makes it pro because things are flashing. I apologize if I'm answering questions from like half an hour ago, but that's what you get. That's what you get with me. I don't look at the comments way enough. Do you invest in any index funds, ETFs? Yeah. So let me just switch the camera because this is just boring people probably now. So I'm showing you my ISA portfolio with trading 212, and naturally, so this is not 100%. So as I said, I have money also in free trade. I also have money in eToro, and I also have so I have a family. So my wife has her own investments too, and we sort of like manage them together, right? So like it's so I don't have all my 100% of my sort of portfolio distribution within each because that to me doesn't make sense. So with the ISA, if I take a step back, the big benefit is it's a tax advantaged account, and this probably would apply like to US things as well. If I had a Roth IRA or other thing, if I look at it and I go, well, what is the benefit here? The benefit is that I don't have to pay capital gains or dividends if these things grow a lot. If they don't grow a lot, I can still draw down £12,300 worth of gains every year without paying any tax on it. So thinking about it that way, it's like, well, okay, so it really, if you're trying to like game it, the safe stuff, the stuff that you don't expect to grow a lot, like for example, my S&P 500 holdings, it doesn't make much sense for me to keep them in this account because this is the account where I want to have the high risk, high reward stuff that if that really grows, so if I'm putting my 20,000 quid in now and say in 10 years or in 5 years or whatever time frame, they go and multiply in the long run as I switch in between these different companies, etc., then I'm like interested in that tax-free benefit. So this is the riskier end, I guess, of my portfolio for that reason. And also it's about taking advantages of the individual companies. So these guys are very cheap for long-term passive investing in US stocks. I made a video recently about it. Both on their invest account and their ISA, because although they have the 0.15% fee now, well, it's not quite in now, it's going to be in the beginning of April, but once it's in, even with that fee, they're still cheaper than pretty much any other platform except for eToro if you are frequently swapping between them. But if you're not, which I'm not really, they're still extremely cheap. So investing in US stocks is also advantageous through this for that reason, because there's this advantage. So that's probably why you're seeing a lot of this in my portfolio here. People are talking about how they're down on Tesla. Yeah, join the club. We're all down. Well, I mean, I'm slightly up. I'm actually up on Tesla in this particular portfolio, but anyway, I need to go and make some investments. What should we buy? I'm probably buying it. Oh, Tesla's up to 690. I should have bought at 680. I knew I should have bought it at 680. Should never time the market. Just buy it when you see it. How much we got? 700 quid to put in something. What should I invest in, guys? What do you reckon? Will Tesla bounce back? Daniel is asking. My personal opinion is that in the long term, all the macro weird like effects like this and sell-offs and corrections and things are not as important as the fundamentals of the company, because in the end, those win like every time. If a company is making a lot of money, making a lot of product, making a lot of service, earning a lot, in their share price will go up in the long run. How it gets there, nobody knows, but that's why that's another reason I love long term investing over short term. Like I don't have to try to have like live news running and tickers and trying to understand like why people might be thinking particular things, second guessing. I don't care. Like Tesla's dropped. I think at the peak they were below my valuation somewhat considerably, and I may be bullish on them, but I have my reasons. I think some people are not taking into account some of the stuff they're doing fully in their valuations, because they're projecting numbers that don't fully account for the benefits that some of the reinvestment they're doing are going to bring. But that's just my personal view, and okay, it is partly reflected in the PE ratio. I get all these, but in my mind, I think the baseline number is just like the wrong number to be going off with them. But as in like performance, say even in the last quarter or in the last year. So anyway, that's just my view. Um, Abdullah's asking, am I invested in any AIM stocks? I used to have a few. No, I only have like Team 17 at the moment. I actually have quite a bit of it in my pension for fun, but it's not doing too well at the moment. AMC about to go to the moon. Don't let's. I'm just so bored of that whole GameStop story. Oh my god. I know it's like the opposite of what everyone else. I just feel like, can we just have some normal investing stuff going on where we can talk about real world issues and problems, rather than like a share price that jumps to the moon and then collapses back down twice. And I don't think I've seen this type of thing happen before with GME. In case anyone's not aware, okay, so should we open up a GME? This is just like nuts. I mean, look. How do I? Yeah, so we're sort of climbing back up. So this is the previous time I was having fun up here, and we're doing another climb up here over a longer period. But who knows? People are saying this can go a hell of a lot higher. I just don't. It's like it's a pure hype slash game slash forces you don't understand or know, no matter how smart you are, because like you don't know what exact positions and like internal like financial situations the hedge funds that play in this have, or it's just like you don't, so you're sort of playing blind. You think you do, and there's like some tint, but really you're playing in a situation where the other side knows the actual trades that you are making. Well, not you, but people say on Robinhood, etc. So like the other side knows your cards, and you're playing there with your cards like this, and you think you're going to win, and there's a small chance that you will. But I don't like the odds. I don't like the sort of the game in that sense. So I'm not interested particularly in that. But anyway, each to their own, right? Everyone has their own preference. Uh, what do I think about cannabis stocks? There's definitely a potential in there, as you know, like the legislative changes. The problem is just because the thing, like, for me to invest in a company, two kind of things have to really happen. One is I want to see that the company itself is growing within their industry massively, and the second is I want to see the industry like blowing up and growing massively, or a subsegment of the industry they're in. So with cannabis firms, the latter is definitely the case. It's like countries are becoming more lenient. The sort of mindsets around it are changing. People are becoming more accepting of it. It is becoming like the norm. I remember traveling a long time ago to Slovenia, where it was already sort of legalized to a large degree, marijuana, and you could like order marijuana cake in a restaurant and stuff, and that seemed odd. But like people's mindsets and attitudes do change. But at the same time, I don't know which of the companies, like based on the very early metrics, like like one jumps and another, And like, am I investing in MySpace before the Facebook turns up? It's really hard to tell. Really hard to tell at the moment for me, because I don't really have enough to go on as it stands. I don't understand the medical element of their business well enough, so I can't really project. And so to me, like, yeah, I could go and spread my money across a few of them, hoping that one of them shoots, but I just don't really know. Um, what else are people saying? Tesla might be overpriced at the moment, but is way underpriced if you take into account the potential of the company. Well, I think the price should reflect the potential of the company, because that's what you're buying. You're buying future flows at a discount that you're happy with, right? That's fundamentals of what the price is really at. Rolls Royce long term, I've heard a few comments. I'm not sure if it's the same person or whatever, but I just don't know. Again, Rolls Royce, like, people often think about they're an aircraft industry primarily, and defense industry and other kind of big industries like that, contractor, right? That's kind of the primary part of the business, really. And I have no idea on both those fronts exactly where those are going to be going, and whether they're going to remain the primary supplier, and whether those, like say, the travel industry is going to bounce and they're going to begin producing huge, or if the types of engines are going to fundamentally shift, and whether Rolls Royce is not going to be the company that's going to be part of that shift. I just don't know at this stage, and I think the risks are so high. I just don't know. I think the volatility around those are what prevents me. So as an example, like, let's look at Tesla as an example. Like, I'm not going to talk specific numbers, but you look at a company where they are a few years ahead in terms of the tech development. If you look at the factories and the stuff they've been innovating and doing, and the marginal performance improvements they've been squeaking out of their engines, out of their battery packs, and down to beginning to actually work on their own battery packs, like proprietary tech, etc. They are a few years ahead of where all the competition is. And that's probably putting it lightly. With some of the gigafactories, the learnings they're going to be getting very quickly from those are going to be pushing them even further ahead. So they are growing massively within the, like, I don't know, just car industry overall, I guess, and sort of even within the electric kind of car space, like, they're sort of like just solidifying their position. But then the EV market, as proportion of total cars market over the next 20 years, I mean, like, I don't think you have to be particularly smart to kind of see where things are headed. Like, when the first cars turned up and everyone's still riding horses, like, well, yeah, I mean, you can still buy a horse, but like, in the modern day, when cars are now beginning to get to a stage where it is almost impossible to actually run out of juice in a day's worth of driving. Like, I know we're not quite there yet, but we're sort of getting to the stage now, right, where it's suddenly like, oh, so it's cheaper to run, it's nicer. Like, I test drove a Tesla, like, it's nice, it's quiet. You can have a conversation, and the hum of the car doesn't drown out my boring voice, which, there's massive advantages. You get a frunk. Get a frunk. Anyway, there are genuine, like, absolute advantages, way greener, etc. And so they are going to get there. And so when I see both of those happening at the same time, I'm like, okay, well, I am interested. And as I say it, Tesla begins showing red candlesticks, beginning to dive. There we go. So there we go. So that's sort of the example of, and then nobody even talks about their energy business. And that business is so early on. It's like sort of in its infancy, but that can become a huge component of what they do. The building, the sort of like massive storages of energy, especially in states where the swings are really big. California and Texas are the two that they're currently beginning to do stuff in, and Utah. And like, I think people underestimate, like, the price difference between daily consumption, and, like, say, nighttime, when some of the power that can't be stopped, are vast. And if you can have a really cost-effective way of averaging that out, there is an insane amount of money to be made. We're talking like orders of magnitude difference between the nightly prices and the daily. And, like, there's wind, there's tidal, there's nuclear that runs 24/7. And if you have basically the only real big company that is building not just like huge scalable ways of capturing the cheap stuff and then selling it at the higher rate, and then also bringing the rate down and sort of making people dependent on you. I just think people are underestimating in a massive way what that means. And there's pretty much one company doing it. and they're beginning to. They're sort of like what Tesla, I think, in cars was when they first began looking at the Model S, like after the Roadster, and everyone's saying, I'm not sure, but you look at the fundamentals, and to me, I want in on this. I don't care. This is before they even do anything else. But anyway, we're going to get into that in a very detailed Tesla specific video at some point. Oh, what problem I see with Tesla energy bins that wouldn't be hard for competitors to come in. None of the tech is particularly hard. The thing is, I think people underestimate how hard the tech is. It's the same with with cars. You look at what Tesla have done with EVs and what other people are trying, and the difference just in the tech of the battery cells. It's bigger than people I think give them credit for. I think it's easy to look at, oh well, it's similar, but if you look at the underlying metrics and what they're able to now squeeze out of those cars and how fast that's accelerating with Tesla, because at the end of the day, all of these cars, you have to remember, all these cars, they basically, if you make a super basic explanation, they basically use the same AA batteries, in a slightly different guise and form factor, but it's like AA batteries, just loads of them, rechargeable ones, and so the tech around squeezing an extra 10%, it might seem like it's only 10%, but it is a massive step. If you're squeezing in 30 or 40% over your rivals, which is what Tesla's doing at the moment, that difference is huge. Because as batteries, let's say the next generation batteries are invented, come about, people begin using steel instead of lithium to bring down the cost. Sorry, not steel, iron, whatever. Whatever happens, and you maintain that advantage on the next leap, I just think that can be really big. But anyway, that's just my personal view. I'm not. I am not an electrical engineer. I'm just a guy who likes to dive into the geekazoid territory a bit too much. But that's just my view. Let's see. I wonder if Tesla are regretting choosing Germany over UK for the Gigafactory. I don't think they are at all. Look at the European market and look at the UK market. And sure, the UK market is big and but if you were a business making that decision, you'd make that decision any day of the week, right? Supply to 250 or 300 million people over 60. And sure, there's a higher buying power in the UK, but I'd be making that choice as well, single distribution system, single taxation zone. Maybe in the future they'll also do stuff here in a smaller factory or just ship them over. I don't know. We shall see about that. It'll be interesting. The biggest driver I think over the next 3 years probably for Tesla is going to be the margins they could squeeze on the smaller cars, Model 3, Model Y. And this is the thing, up till now, the Model S, Model X has been such a big, even if the volumes are not high, that's where some of the margins existed. And they've only in the last few months, really, in the last year, really accelerated big time with producing, the smaller cars, and the margins of them are very different, obviously, completely different sell price, and also they've had to drop the sell prices in some countries, and that's significantly eaten into the margin. But building a giga over in Shanghai, building one potentially in either Japan or South Korea, which is sort of mooted but not confirmed, building one in Berlin to produce the small cars for the European market, which likes small cars, which makes a ton of sense. It's going to add so much on that margin, because sure, Germany's not the cheapest country, but you're manufacturing them on site, which is a hugely different proposition to what it is at the moment, and not having to switch, because even some of the differences in the cars mean the factory production line is less optimal, because you're manufacturing some cars for the US market. There's actual differences in the cars to the ones that you manufacture for the UK or European markets, and having to reconcile. And so that's going to optimize. So it's not just adding a Germany factory and then having two. It's the US factory will be better as a result of not having produced the European models, and the European car factory will be better without having produced the US. So it's there's multiplicative effects there as well that I'm really excited by. Governments need to remove tax from all electric vehicles, bicycle cars. Well, yeah, the problem is they have to get tax from somewhere, right? And if all cars suddenly become green, so they were encouraging them by removing taxes from them. But if suddenly all cars are green and people are not paying taxes, then that's not going to really help them in the long run, right? That's not going to help them with making a lot of money if suddenly petrol and diesel can't be taxed. So I think those are going to continue creeping up as they already have been, and we're not going to see the same benefits in the long run on having a green car, because it's just going to become a car. Do I own Palantir? Gareth is asking. I own a small amount of Palantir. More on some of my other investment portfolios, and this one not much at all. How much do I have? Like 20, 45. Not really is the answer. Not really. There we go. CS asking Sasha, if you had £500 a month to invest, where would I put it? A few different long-term chip semiconductors. So I made a video early on in this year, which was my like investing strategy for me that I follow, and I actually my overall distributions right now are skewed because of what's been happening, but overall I'm actually not far off that on average, and I will be moving back towards it. It basically talks through my distributions. I think it's called like my how to build a kick-ass investment portfolio. Go and watch that video. It literally explains the whole thing. Anyone else interested in my mindset around how I kind of distribute my money? That's how it is at the moment, and I'm sticking to it. I even use that pretty much as a default setting for my pension money, which most people probably would advise against. But I'm so young that I'm okay with the risk associated, even though it's like supposed to be something that you're meant to be more careful with. I have my own personal views on what's careful and what's not careful. But anyway, so just go and check that out. What are some stocks on your watch list that you're most interested in looking buying not bought yet? That's a really good question. There's probably a few. There's probably a few that I'm really excited by that I don't currently have. So which one should I talk about that I don't currently own any of at all? Because I own small chunks of ones. Maybe I'll talk about some of them as well. So I'm interested in some of the productivity software. I do own them, but they are very small holdings. So like Asana is one, and I own like 300 quid's worth of Slack, and it's not on here. I think those types of thing, they kind of go with my overall view on where the world of work is going, and where companies are going and how companies are going to work in the future, which is less gigantic companies that employ everyone that might ever need, and more work with smaller businesses, like experts in their fields, individual small entities, and that kind of collaboration software that helps different people, different companies work together more effectively, I think is going to begin exploding. Like the next 10, 20 years, is like people are going to say, well, oh, of course you should have invested in that stuff, at that point. But I'm like, right now people are like, yeah, will it, and I'm just thinking, yeah. I just think like remote working has been accelerated massively, and sure, people are going to go back to offices, but I think it's going to continue going down the road where you can sit in your lounge at home here talking to people who are all over the country, like doing work with people all over the country in other countries. It doesn't matter. I think that's only going to accelerate. Technology is enabling this and making this easier. In the past, you couldn't really even have video calls properly. The internet is improving all the time. So all of these things, I think, are going to drive some of those stocks a lot. And the experience and the technology and stuff that these companies have built up mean that sure, the other competitors can come in, but it's actually not as easy as people think. So like Zoom is another one in that category that I'm quite excited by. So those I'm definitely like, I'm not heavy on, but I think I will be going much heavier on in the future. Shutterstock is an interesting one. I actually have Vale Resorts an interesting one. I think Vale Resorts is going to be potentially exploding in the next year or two as the pandemic wears off. They're like unique, sort of like a company that pretty much owns this entire like super in demand part of the Rockies. Most convenient from Denver, closer than Aspen. They're so when you begin breaking down like their business model and what they've been investing in over the last couple of years, I think like it's a weird stock. It's travel and seems weird, but I don't have very much of it at all at the moment. But I'm kind of excited about that one as well. So there we go. All right. Currently listening to Own the World as recommended by myself. Really? Own the World? What is that? Do you think it holds up in today's climate, Sasha? I recommended Own the World. I'm not sure. I think I'm missing something. Do I think it holds up? I'm not sure what this is. I can't remember recommending it. Maybe it's good. Maybe I did. Maybe it's I'm confused. Yes, thanks for answering your comments. It's very informative. Thank you very much, Stephen. Yeah, all right. So I'm gonna go and jump off in about 10 minutes, guys. So I'm gonna answer just a few more questions before I do that. Somebody's asking, how have I thought about starting a Discord community around Tesla shareholders one? Interesting question. Lippy A is asking. I've been thinking a lot about what to do on those fronts, and I'm actually a member of some Discord groups. But the problem is, my biggest constraint, as it stands, is time. So like I have so many ideas. I have massive lists of things I want to do, massive list of things that I need to do, and my ultimate ceiling is just time. It's not will, it's not want. I work at nights often. I just don't have enough time to achieve the different things that I'm trying to achieve. And my problem with setting up a Discord group is I don't want to set one up where like people just all sit there chatting about, oh, this stock is going to the moon, blah blah. It's like I don't think they'll add value if I'm not actively participating, if I'm not actively managing in some way. And I know you can appoint people to do that, but then it just becomes yet another group of like people just throwing random comments about stocks, blah blah, whatever. I'm not a fan of that kind of stuff. I don't want necessarily that. So I think right now I'm just not in a position where I want to dive into that. Although what I will be doing in the next week or two is I'm going to be adding memberships. And people said people love Patreon. I'm not sure I want to do the Patreon because again, it's the same reason. It's a separate platform, and I have to go and talk to people on that other platform. And I know because of my time constraints that I won't actually give it like any real time, and so people can be like paying money for something where they're not really getting the value, and I don't want to be doing that either. And just getting people to pay for no reason is just like not really kind of where I want to be. And so I'm not sure about it for that reason. So I'll probably be opening in the Google the YouTube join button, and I'll have a thing like I'll keep it like sort of very minor. So minor on my commitment, but also minor on cost in exchange, so that people don't feel cheated. So that people feel like there's a bit of benefit and a bit of extra laughs that you can get, but it's kind of a fair exchange. So I'll be opening that as the next step of engagement. But the reason I'm doing these live, is it's sort of a way where I can go and spend an hour of my time or an hour and a half of my time and actually go and talk to people and answer a bunch of questions and try to like try to show the sort of the unscripted version of Sasha, if you like, and try to talk to people that way, which sort of I think is even maybe better in my. And I know not everyone can watch these, and people will not watch them after they happen because that's the most boring thing you can do. Why would you go and sit for an hour and a half watching this? Just like a random guy talking about stuff he has no idea about, right? But I hope like for at least some people who do join, maybe there's a bit of value. Maybe they like think about things in a slightly different way, which can like structure their thoughts better. Maybe just a contrary view to how you think, and you value that in itself. And I'm going to try to do that as my form of engagement more. I think because it's a bit easier for me. I can spend an hour like with a Discord group. I probably have to spend far more time to probably provide less value and less interaction. So that's my view. All right, what other questions do we have before we're going to go and do something productive and actually make an actual video? What do you think of airline stocks going forward? Same reason as with some of the other things I said. I do not know. I do not know which airlines are going to come out as good, which like they're in a dire financial position at the moment. That's not going to go away anytime soon. Like all over the world, these airlines are in actual debt and ineffective debt, where they haven't been paying out customers who should have flown a year ago, but flights got cancelled. So there's just like, I think that they're going to be trawling through the legal implications and the money implications of this for a long time. But there's going to be this big surge in demand at the same time, right? And I think it's such an unprecedented thing that I don't even know how to begin to trying to weigh up what that's going to mean for shareholder value. So I'm just like happy to watch from the sidelines. I hope that they do really well, but I don't invest in hope. So there we go. Can't invest in NEO in UK ISIS. Correct. I don't have NEO in this portfolio, but I do in some of the others. So UK ISIS have some restrictions on the markets that you can invest in and the types of companies. For the big stocks, you won't notice it, but for example, like because of where NEO trades, you can't go and invest in it. All right. Are there any recent questions that I haven't answered? Just by promising. Tesla, type in Tesla in Somerset factory and Google easy rumors of a factory in Somerset for Tesla. I haven't heard those personally. I have a feeling that if they're going to be opening up a factory somewhere that hasn't been announced, I think the Giga Asia, I think, is the highest probability. And seeing as the current plans are, like for this year going into next year. I think we're probably talking about late 2022 into 2023 for that one. So in terms of like a 5 year outlook, I probably wouldn't be baking in like a UK based factory. If I had to guess, I would say like a Central America factory to make cheaper, smaller cars for those markets as they begin catching up, potentially, or a second European hub, or another US hub. But I don't see much beyond that. But I don't know. Um, can I do a video about eToro and trading stop losses for smaller investors, e.g., holding single shares? I mean, that's a very specific ask. I don't. Are you interested about eToro? Are you interested about trading stop losses, the concept, the specifics of how it works in eToro? I'm not really sure. That sounds like a very specific issue, but I don't know. Do I prefer holding UK US stocks? I don't prefer holding either. I don't care like for the country whatsoever. I prefer holding stocks that have a massive capacity to grow internationally across all the different markets. Look at the companies that I currently have on the screen: Tesla, Apple, Fiverr. These guys are everywhere. They just all happen to be based in the US. If the same, like if a company was doing the kind of stuff these guys are doing based in the UK, I'd invest in them as well. I don't care. Like I don't have a country preference whatsoever. I just look at an individual company and what they're doing. It just so happens that because of the concentration of workforce in San Francisco, LA, in particular, because of the concentration of money, investor money that enables these companies to go through the first few years without being able to earn money, the concentration of like all of these different things in that place, it's just kind of causing this to be a repetitive cycle where a lot of these companies are based because a big company with loads of smart people who they've been paying lots of money for is based. And if you want those smart people to work for you, you kind of have to be based down the road in order to be able to steal them, right? And then that kind of self perpetuates. So it just happens to be that. But maybe more of that will be happening in the future in the UK. I have small investments in some UK companies, but nothing big at the moment. So there we go. Anyway, guys, I'm gonna leave it at that. I'm gonna go and try to work on a few other things that I was talking about earlier in the video. Thank you so much for watching. I really appreciate it. Hopefully I've answered most, maybe some of the questions. I'm really sorry that I didn't see some of the messages, some of the questions. That's just how it is. I tried to look at a few different things at the same time. Actually, wait a second. I said I'm going to leave and everyone's already quit, but we haven't invested money. We need to go and buy something. Should we go buy some Tesla? Now that nobody's watching, we're going to go and buy some Tesla. Are they going to drop further towards the end of the day? I don't know. Should we buy a share of Tesla? Buy. How much we got? We got 217. What else should we buy? Just before we go. Adobe. Do we have much Adobe? What are our holdings? 1.6 shares. What do you guys reckon? Should we buy some Adobe? Let's see. Yeah, some are green shoots, but we're still miles away, right? We're still miles. We're going to buy some Adobe. Let's buy some Adobe. I'm going to buy like half a share. What else should we buy? Got 55.94 left. Where are we going to dump that? Let's buy some AMD. Oh, it's client. Let's buy Nvidia. It doesn't get enough love. How much have we got? 55 what? 90. I swear that was different last time I clicked this. I swear it was different. Okay, 55.90. Okay. There we go. Nice. We've invested all our money. So yeah. Now that that's done, now I can go and do something actually useful with my life, other than staring at these screens, because I do it for fun, but I don't really do very much on the back of it, so it seems like a bit of a waste. Thank you very much for watching, everyone, once again. Really appreciate it, and I'll see you guys later.